Crypto lending is all the rage right now, and that has jump-started a bit of a battle between decentralized and centralized finance. DeFi versus CeFi, if you will. Now, I'm a bit of a not your keys, not your Bitcoin type of chap. However, I couldn't help but notice that there was one centralized finance token shooting the lights out recently. So, what's this project I'm talking about? Well, that would be Celcius Network. I'm Guy, and in this video, I'll be taking a closer look at this lending platform, the use case for the CEL token and its tokenomics. All that is to help you decide if the Celcius network is really worth it, and if CEL tokens still have legs to run. So, be sure to stick around. Before I get going, there are a few things I need to say. Don't let my charming smile fool you. I am no financial advisor. Sorry to let you down there. That means that this video is for educational purposes only. Be sure to consult your real financial guru before making any hasty decisions. I also want to welcome anyone new to the Bureau. I like to tell my mates that I spend all day in Coin Bureau HQ to save myself from COVID. However, the truth is that I'm busy working on creating useful guides and coin overviews for you folks. So, if that's something you want to see more of, then sign up to Team Coin Bureau by smashing that subscribe button and turning on all those notifications. Do that and you'll never miss any of my pearls of crypto wisdom. Finally, I know that your time is important. That's why I've provided some useful timestamps below. Use them to skip ahead to the sections of my analysis that interest you. Is it getting hot in here? Let's see what the forecast is for Celcius. Now, for those of you who are new to Celcius, we need a bit of an overview. So, what is Celcius? Well, in short, it's a centralized crypto lending platform that enables you to earn interest, take out a crypto loan, and pay or be paid in crypto. All that is done through the Celcius app. So, how good are those rates of interest? Well, you can earn up to 22.4% APY by supplying crypto to the Celcius app. Yes, that is for select cryptocurrencies only, but you can get that mind-boggling rate by depositing synthetics or matic tokens. Deposit stablecoins like Tether, USDC, DAI, PAX, etc., and you can scoop up a whopping 15.8% interest. Last time I checked, 33 different cryptocurrencies were supported by the app. For the granddaddy of crypto, Bitcoin, you can earn up to 6.2% interest, and ETH holders can get nearly 9%. Seriously folks, these are some pretty attractive returns, particularly when you consider that most banks pay you next to nothing on your deposits. Now, the astute amongst you will probably notice that I've been talking about the top tier of interest. So, how on earth do you get it? Well, Celcius has its own reward program that can top up your interest returns to that top tier interest figure. Basically, if more than 15% of your holdings on the Celcius app are in CEL tokens, then you'll enjoy a 35% bonus interest reward to get you up to that top rate of interest. The main thing to know here is that the higher rate of interest will be paid in CEL tokens as opposed to the crypto you're supplying. Another neat thing about this reward program is that it's all based on the ratio of your holdings within the Celcius app and not the amount. So, anyone can access those top tier rewards. It doesn't matter if you're supplying $10 or $10 million worth of crypto. Provided you hold more than 15% of your Celcius app balance in CEL, you'll get those platinum VIP reward perks. On top of that, borrowers can get a loan interest discount up to 30%. Pretty sweet if you ask me. And that segues me nicely onto the crypto loans available at Celcius. The lending platform allows you to take out what is known as a collateralized loan. The minimum loan is a pretty reasonable $1,000, and you can choose a loan-to-value ratio of 25%, 33%, or 50%. With an LTV of 25%, you can get an APR as low as 1% if you pay the interest with fiat, and an incredible 0.7% if you pay in CEL tokens. One more thing, you have the option to pay that loan back over 6 months, a year, 2 years, or even a 3-year term. To put that into context, I could take out a loan of $1,000 for 6 months at a loan-to-value ratio of 25%, and I'd only have to pay $3.50 in interest if I paid in CEL. That's an astonishingly low rate of interest. Also, because the loans on Celcius are collateralized, that means that there's no annoying paperwork and loans get approved instantly. So yes, it's infinitely easier than hopping along to your local bank and jumping through all those traditional finance hoops. In terms of supported countries, you can use Celcius provided you're not based in any of the countries here. Oh yes, another neat feature of the app is CEL Pay. This is just a really user-friendly way to send or receive crypto from other Celcius users for free. So, I imagine you're thinking that Celcius app seems great, but is it really all that popular? Well, it turns out they have processed $8.2 billion in loans, have over 176,000 users, and an incredible $1.1 billion in assets under management. Oh yes, around $45 million in interest has been paid out by Celcius to users so far. Now this all begs the question, is this all too good to be true? And is Celcius just an elaborate Ponzi scheme? Well, let's take a look, shall we? To the casual observer, it seems that those super high interest payments are being magicked out of thin air or being paid for out of the deposits of new users. According to Celcius, they basically take the coins that are deposited by people like you and me and lend them to institutions. Now, let's call that what it is. It's securities lending. This is actually one of the major ways that companies like Robinhood make money. Celcius simply takes that model and applies it to crypto. So what's happening is that Celcius is aggregating the supply of crypto from retail, lending it to institutions that pay Celcius interest, and then they take 80% of that interest and give it back to the community. The fancy term for this is rehypothecation. What that means is that crypto depositors on Celcius get to benefit from 80% of the value being created, and that's how those insanely high interest rates are generated. Now think about banks like Citi. They give the customer practically nothing when they rehypothecate and lend out your Facebook stock or your Tesla stock. So Celcius took that rehypothecation model and applied it to crypto. This is the vast majority of the business that Celcius does. The rest of the business is giving loans to people who have supplied crypto. By that, I mean you could be a retail depositor. One minute you could be earning interest, and the next you could be taking a loan. Usually, when you take a loan, you need fiat or stablecoins. So if you were to do that, you would essentially be saying, hey Celcius, here's $10,000 worth of Bitcoin, and I'd like $5,000 in fiat or stablecoins. So, why would you want to do that? Well, you might want to pay some bills, or you might want to defer taxes. However, to do that, you don't want to sell your crypto. Instead, you want to borrow against it. The cool thing about Celcius is that they can offer that loan service for fees as low as 0.7%. That begs the question, how the heck can they charge such a low fee? Well, it's because they make the vast majority of their money by rehypothecation, and that means they don't need to charge you very high interest rates. It's this that allows you to earn high interest on your Celcius deposits and pay low interest on your loans. For those that think these types of interest rates are too good to be true, consider that banks like JP Morgan can borrow from central banks like the Fed or the Bank of England at next to no cost. However, how many of these banks have lowered the amount that they charge customers on a credit card? I can't seem to find that many. Now get the Sapphire Reserve card from Chase Bank and you'll pay 17 to 24% on outstanding balances. That's basically money that those greedy JP Morgan bankers can get practically free from the Fed. What all that means is bigger profits for banks. However, Celcius takes a different approach and passes on 80% of that value to users in the form of higher interest rates for depositors and lower interest rates for borrowers. Now, I'm sure you know that nothing in the world is entirely risk-free. So, let's move on and look at how risky Celcius is, shall we? What Celcius is doing is effectively securities lending. That's actually one of the most secure businesses on Wall Street. You'll struggle to find an example of one bank that made a loss on their securities lending business. Basically, that's due to the fact that transactions are being made with collateral. Celcius does the exact same thing when they lend to big institutions. So, who are these faceless institutions? Well, there are either crypto exchanges or companies with large balance sheets. Nonetheless, Celcius still requires institutional borrowers to put up collateral. If their balance sheet is huge, then Celcius might only ask for 50% in collateral. What that means is that Celcius might say, here's $10 million in Bitcoin, give us $5 million in cash as collateral. So that begs the question, why would any institution want to do that in the first place? Well, the reason why is that most of these institutions are dollar denominated, meaning they have dollars, but they trade in Bitcoin and they don't want to take on the volatility risk of Bitcoin going up or down. So that's why they want to borrow the crypto assets for market making to allow clients to go short or to do arbitrage. This enables them to snuff out the directional risk of specific cryptocurrencies moving up and down. Another potential risk is if the collateral put up by institutions is insufficient. The thing is that Celcius doesn't wait until the value of a cryptocurrency drops below the value of the collateral in USD terms. Most borrowers have a margin call. A good example of how these margin calls are managed is if we think back to the 12th of March of this year. Now, on that fateful day, Bitcoin dropped from about 7.4K to 4.2K within 24 hours. BitMEX liquidated about $1 billion, Nexo and BlockFi liquidated hundreds of millions of dollars. DeFi platforms liquidated about $250 million, and Celcius apparently liquidated no one. The reason why is that Celcius made their margin calls and received additional collateral from institutions with loans outstanding. That seems to indicate that Celcius manages margin calls damn well and asks for additional collateral quickly. It also shows that the types of institutions they lend to have strong enough balance sheets to move that liquid cash quickly to recollateralize those loans. However, with all that being said, there is a famous saying in the cryptocurrency sphere, not your keys, not your crypto. With Celcius, rehypothecation means that there is some counterparty risk. Basically, if you're using Celcius, you are trusting that the project will keep on managing this risk well and ensure that institutions honor their margin calls. If the project fails to do that, then you can kiss that sweet, sweet crypto interest goodbye. Another major concern that's common for any centralized platform would be data breaches. Celcius competitor BlockFi had such a breach this year, and that resulted in the leaking of customer details. If you hold a large amount of crypto on Celcius, you probably don't want a random hacker knowing that and having access to your personal details. That's kind of a physical security concern. Honestly, I am a bit of a not your keys kind of guy. It might be me being paranoid, but I personally don't want to entrust my crypto to any centralized entity. That's one of the main reasons I got into crypto in the first place. However, I accept that there are a lot of people out there that will never want to manage their own keys. Ultimately, it's up to you to weigh up these risks and work out if those interest rates are worth it or not. Now, I want to move on and talk a bit about Alex Mashinsky, the co-founder of Celcius. After all, many of you considering using the app will want to know if the project's leadership is any good. So, let's investigate, shall we? Okay folks, Celcius co-founder Alex Mashinsky is one impressive entrepreneur with quite the track record. He was the bloke that brought free Wi-Fi to the New York subway and enabled Wi-Fi on US flights via his business Transit Wireless. He was able to make $1.2 billion on Transit Wireless. Pretty impressive if you ask me. Indeed, he founded 2 of New York's top 10 biggest venture-backed exits since the year 2000. He was also one of the early developers and inventors on VoIP, which enables 1 billion people today to use voice calls over the internet for free. On top of that, he's authored over 50 patents that cover aspects of VoIP, Groupon, Twitter, Skype, the App Store, the Netflix streaming concept, and more. In terms of being recognized for his entrepreneurial efforts, Alex has a plethora of awards. These include the Albert Einstein Technology Medal, the Technology Foresight Award for Innovation, E&Y's Entrepreneur of the Year Award, and more. So, yes, you can be assured that Celcius has a leader at the helm that knows exactly how to build a business and achieve exciting levels of valuation. And it's not just users that appear to be comfortable with Alex at the helm of Celcius. The company has been through a number of public and private fundraising rounds. They raised $50 million during its ICO in 2018. However, the project also raised a further $20 million this year by selling 12.41% of the company's equity via Bank to the Future. This money was apparently raised for strategic expansion. Now, honestly, I'm a little bit stumped on why Celcius would need to raise additional capital if they were doing so well. However, you should know that half of the money raised in the equity fundraise came from Tether. Yeah, those guys at Tether chucked $10 million into Celcius, so make of that what you will. Anyways, one of the most important aspects of the Celcius network has to be those CEL tokens. So, I now want to take a further look into CEL's tokenomics and use cases. Care to join me? CEL is the utility token of the Celcius ecosystem. It's used to unlock loyalty tiers which grant interest bonus rewards as high as 35% and loan interest discounts of up to 30%. So yeah, if you want to take advantage of those perks, then you'll need to hold at least 15% of your Celcius balance in CEL. Institutions that borrow coins from Celcius also receive a 30% discount on interest payments if they pay in CEL. So there's certainly some institutional demand for the token here as well. Another key driver for CEL demand actually comes from the project itself. As Celcius acquires more users, that leads to more deposits. More depositors mean more coin loans. More coin loans mean more interest, and more interest means more value distributed to the community. Now, that really matters when over 40% of the community have chosen to earn interest in CEL. That means that Celcius needs to go into the crypto market and buy CEL tokens to pay users interest in the token. The result is that Celcius is actually the biggest buyer of its own token, and let's face it, these market buys should be positive for the token price. Another thing to note is that CEL is a staking token that pays 5% interest. So there are probably some people out there that are attracted to CEL as a way to generate a relatively minor passive staking income too. This staking return also increases the incentive for users to stake. The total CEL supply is around 695 million tokens, with around 238 million circulating according to CoinMarketCap. So let's take a step back and consider some of these factors. You have an increasing demand from users to hold CEL in order to get a higher return on their deposits. Add to that the demand from Celcius in order to pay out the interest in CEL. You then also have some users who will choose to stake their CEL in order to earn those staking returns. This further restricts that circulating supply. All of these demand and supply factors are, of course, positive for the price of the token. So, in a nutshell, the price action of the CEL token is inextricably linked to the popularity of the Celcius app. Provided that the project keeps on acquiring more users, then this should spell good news for the continued appreciation of the token. Okay team, that's about as much as I'll share with you today on the Celcius network. It is, however, time to share some of my closing thoughts on it. I'm going to be straight up with you. Celcius does seem to be offering super competitive interest rates. It boasts impressive user figures, and it has a leader who has basically done it all when it comes to entrepreneurship. The explanations of how Celcius generates these high rates of interest for users do make sense at a surface level. However, I cannot personally verify if any of this rehypothecation actually happens or not. Then again, I guess that most clients borrowing crypto from Celcius would rather not make that public or want the exact terms to be disclosed publicly. Personally, I very much like the token demand drivers. They seem to make a bunch of sense to me when it comes to broader token utility. However, CEL's valuation rests on the popularity of the lending platform, and we cannot be certain that something newer and shinier won't come out of the woodwork soon. Ultimately, Celcius is a centralized lending solution, and you do not own the private keys to your crypto. So, this fact alone means that Celcius isn't exactly my cup of tea. However, if you're looking for a CeFi lending platform, then Celcius seems like a solid option to have on your radar. If you're interested in trying it out for yourself, then be sure to check out my link in the description below. And that is it, Crypto Crew, my overview of Celcius. I've done enough jibber-jabbering, and it's now time to hear your thoughts. So, what do you think of Celcius? And have any of you used it before? Let me know in the comments below. Oh yes, I've got some news if you're interested in crypto trading. I've recently set up my own trading competition and I'm giving away thousands of dollars in stablecoin every month. Also, I've been able to negotiate an exclusive sign-up bonus and a 15% trading fee discount just for you folks. So, if that sounds like something you can benefit from, then be sure to check out the link in the description. And finally, if you think I deserve a socially distanced pat on the back for my work on YouTube, then be sure to hit that like button. If you want to go a step further and make me your personal crypto guru, then make sure to subscribe. I would be most honored. Thank you for being a loyal member of my community. I want to give back to you lovely people to show my gratitude. Every week I share an email of my personal insights into the crypto market. This covers everything from hot coin picks to market analysis. And it's where I also share the breakdown of my personal portfolio. So, do you want to join me? Smashing! Just head on over to the description and you will find a link to my sign-up form. Then you just insert your email and hit submit. You will just need to confirm your email and hey presto, you are a member. I'm working on my next mailer as we speak.